What if I told you that, at this very moment, billions of dollars are flowing into artificial intelligence, while only a handful of investors truly understand what is happening? Behind the record-breaking headlines and soaring stock prices, a silent battle has already begun, and the outcome could change the future of investing forever. Behind every AI headline lies a race that most people never see. It is not just about building smarter software, it is about winning control of the next trillion-dollar industry. Every day, companies are investing billions, knowing that whoever leads this race could dominate the global economy for decades. Every single day, billions of dollars are being poured into artificial intelligence. Tech giants aren't spending this money because they have to, they're spending it because they believe the winner of this race won't just dominate the industry. They'll shape the future of the global economy. But with so much money at stake, one critical question remains: who will actually come out on top? The AI revolution isn't being led by one company, it is being driven by a handful of technology giants, each investing hundreds of billions of dollars to secure the future. Microsoft, Google, Amazon, Meta, and Nvidia aren't simply competing for market share market. The AI revolution didn't begin with a single breakthrough or one famous company. It started quietly, inside research laboratories, university classrooms, and technology startups. For years, artificial intelligence remained a distant dream. Then, almost overnight, everything changed. A few remarkable breakthroughs transformed AI from an experimental technology into the world's most valuable business opportunity. Once the world realized artificial intelligence was no longer science fiction, everything accelerated. Venture capital firms, global corporations, and institutional investors rushed to secure their place in what many believed would become the biggest technological revolution since the internet. Overnight, billions of dollars began flowing into AI, transforming a promising innovation into the center of the global financial markets. Most people think artificial intelligence is powered by software, but behind every AI breakthrough is something far more important: advanced computer chips. Without them, AI simply cannot exist. As demand for faster and smarter systems exploded, the race shifted from software to silicon, creating one of the biggest opportunities Wall Street had ever witnessed. A powerful chip alone doesn't create intelligence. Think of it as the engine of a race car: fast, precise, and incredibly powerful. But without the right software, data, and training, it goes nowhere. When these elements finally come together, something extraordinary happens. Machines begin to recognize patterns, solve problems, and make decisions at a speed no human could ever match. And that is exactly what investors are betting on. At first, artificial intelligence seemed like just another technology trend. But it didn't stay inside Silicon Valley for long. Hospitals began using AI to detect diseases faster. Banks used it to identify fraud in seconds. Factories became smarter, logistics became faster, and businesses discovered entirely new ways to increase productivity. Suddenly, AI wasn't changing one industry, it was changing all of them, and that is when Wall Street realized this wasn't just another innovation, it was the beginning of a completely new economic era. By the time artificial intelligence dominated the headlines, many of Wall Street's largest investors had already made their move. Hedge funds, pension funds, and institutional investors weren't chasing the hype. They were studying long-term trends. They understood a simple truth: the greatest opportunities often appear long before the rest of the world notices. The real question wasn't whether AI would change the economy, it was which companies would benefit the most. Training the world's most advanced AI models requires something extraordinary. Behind every intelligent response lies an enormous network of data centers, thousands of specialized processors, and enough electricity to power entire cities. This isn't just a software revolution anymore. It is a race to build the world's most powerful digital infrastructure. And every new facility represents another billion-dollar investment in the future of artificial intelligence. Building the infrastructure is only the beginning. History has shown that every technological revolution creates winners and losers. Some companies will redefine entire industries, while others may spend billions only to fall behind. Investors aren't just asking who is building AI. They're asking who will own the future, and the answer may be very different from what most people expect. Artificial intelligence is only as powerful as the computers behind it. Every new AI model demands more processing power than the last, pushing companies to build faster chips, larger data centers, and stronger cloud networks. In today's AI race, computing power has become the new currency, and everyone wants more of it. The search for computing power has become the digital version of a gold rush. Instead of digging into the earth, companies are building massive AI campuses, purchasing specialized hardware, and signing billion-dollar contracts. The winners won't necessarily be those with the smartest ideas, but those with the strongest infrastructure. Wall Street quickly recognized a pattern. Every company building AI needed the same essential ingredients: advanced chips, cloud computing, electricity, and data. Instead of investing in just one AI application, many investors began looking at the companies supplying the tools that every AI business depends on. Every revolutionary industry has a hidden supply chain. During the internet boom, it was networking equipment. During the smartphone revolution, it was semiconductor manufacturers. Today, artificial intelligence has created an entirely new ecosystem, where the companies selling the tools may become just as valuable as the companies using them. While headlines often celebrate flashy AI products, many of the biggest financial winners operate quietly behind the scenes. They manufacture processors, design networking equipment, expand cloud infrastructure, and build the systems that power millions of AI requests every single day. Sometimes the quietest businesses produce the loudest returns. As AI adoption accelerated, demand began rising faster than production. Companies found themselves waiting months for specialized hardware. Last forever unless they continued investing. New factories, larger research budgets, and expanded production facilities became top priorities. Instead of maximizing short-term profits, many companies chose to invest heavily in preparing for the next decade of artificial intelligence. Investors watched these announcements carefully. Every expansion plan, every infrastructure project, and every breakthrough in chip technology sent waves through the stock market. Optimism grew rapidly, but experienced investors understood an important lesson. Excitement alone is never enough to sustain long-term growth. Every investment boom carries uncertainty. As expectations continue rising, companies face enormous pressure to deliver results. Spending billions is easy, turning those investments into sustainable profits is much harder. That is why the market constantly asks one difficult question: will today's spending create tomorrow's earnings? Whenever uncertainty enters the market, emotions begin to take control. Some investors panic and sell at the first sign of trouble, while others quietly increase their positions. History has repeatedly shown that moments of fear often create opportunities for those willing to think beyond today's headlines. The world's most successful investors rarely focus on next week's headlines. Instead, they ask a different question: where could this company be 10 years from now? That long-term perspective often separates emotional decisions from disciplined investing. Stock prices tell only part of the story. Behind every chart are engineers creating new technologies, researchers solving impossible problems, and businesses investing billions to build tomorrow's economy. Understanding those fundamentals often provides a clearer picture than watching daily price movements alone. Asterisk: by now, one thing has become clear: artificial intelligence is far more than a passing trend. It represents a transformation that could reshape industries, redefine competition, and create extraordinary opportunities. But as history has shown, every revolution eventually reaches a turning point. The next question isn't whether AI will continue growing, it is what could slow it down. Every technological revolution eventually faces a reality check. For artificial intelligence, the greatest challenge isn't innovation, it is sustainability. Building smarter systems requires enormous amounts of money, electricity, talent, and time. The companies that manage these resources wisely could become tomorrow's leaders. Training a modern AI model isn't measured in thousands or even millions of dollars. It often requires investments worth billions. Massive data centers operate around the clock, consuming enormous amounts of electricity while thousands of specialized processors work together to solve problems in seconds. As AI systems become more powerful, one surprising resource has moved into the spotlight: electricity. Data centers consume extraordinary amounts of power, forcing governments, utility companies, and technology firms to rethink how the future's digital infrastructure will be powered. Around the world, countries are investing heavily in AI infrastructure. New data centers, advanced fiber networks, renewable energy projects, and semiconductor facilities are being built at an unprecedented pace. This is no longer just a competition between companies, it is becoming a competition between nations. Powerful computers alone can't build the future. Behind every AI breakthrough are researchers, software engineers, chip designers, and data scientists whose expertise has become one of the world's most valuable resources. As demand grows, attracting top talent has become another competitive advantage. The AI industry moves at an incredible speed. Every week brings new discoveries, improved models, faster hardware, and unexpected breakthroughs. Companies that stop innovating, even for a short time, risk falling behind in one of the fastest-moving industries the world has ever seen. Investors have rewarded AI companies with enormous valuations, but higher expectations also create greater pressure. Every earnings report, product launch, and financial forecast is carefully examined because even small disappointments can trigger major market reactions. Rapid growth rarely follows a straight line. Markets rise with optimism, then fall with uncertainty. Experienced investors understand that volatility isn't always a warning sign. It can simply be the price of participating in long-term innovation. History offers valuable lessons. Railroads, electricity, automobiles, the internet, and smartphones all experienced periods of incredible excitement followed by sharp corrections. Yet over time, each revolution transformed society in ways few people initially imagined. Not every company entering the AI race will succeed. Some businesses will overpromise and underdeliver. Others will quietly develop technologies that reshape entire industries. Successful investing often means separating genuine long-term innovation from temporary market excitement. The greatest investment returns are rarely earned overnight. They are built through patience, discipline, and consistency. While short-term traders focus on tomorrow's headlines, long-term investors often benefit from years of steady growth, driven by powerful technological trends. Ironically, some of the best investment opportunities appear when uncertainty is at its highest. Fear causes many investors to step aside, while disciplined investors carefully evaluate whether the long-term story has truly changed, or whether emotions are simply driving short-term market movements. Artificial intelligence has already transformed industries, attracted trillions in investment, and reshaped global competition. Yet the most important chapter may still lie ahead. As governments, businesses, and investors prepare for the next phase, one question grows louder than ever: who will define the future of intelligence, and who will be left behind? The first phase of the AI revolution was about proving what artificial intelligence could do. The next phase is far more important. It is about integrating AI into every business, every industry, and eventually, everyday life. That is where the real economic transformation begins. Media headlines often focus on the newest AI model or the latest product launch. But beneath those headlines, companies are quietly redesigning their entire operations. From customer service to manufacturing, AI is becoming part of the foundation rather than just another tool. For decades, businesses searched for ways to produce more with fewer resources. Artificial intelligence is accelerating that goal. Tasks that once required hours can now be completed in minutes, allowing companies to focus more time on innovation and long-term growth. Healthcare, finance, education, manufacturing, transportation, and entertainment are all entering a new era. Each industry is finding unique ways to apply AI, creating opportunities that extend far beyond the technology sector itself. As more companies adopt AI, simply using artificial intelligence will no longer provide an advantage. The winners will be those who apply it more efficiently, make better decisions, and continue innovating faster than their competitors. For consumers, artificial intelligence promises faster services, more personalized experiences, and smarter products. What once seemed futuristic is becoming part of everyday life, often so seamlessly that many people don't even realize AI is working behind the scenes. While consumers enjoy new technology, investors pay attention to something else: financial results. Adoption is exciting, but revenue growth, profit margins, and companies must eventually transform their technological leadership into consistent cash flow. Businesses capable of balancing aggressive investment with financial discipline often build the strongest foundations for long-term success. Every market cycle rewards patience differently. Some investors chase quick profits, while others quietly build positions over many years. History repeatedly suggests that disciplined investing often outperforms emotional decision-making over the long run. No bull market lasts forever. Periodic corrections are a natural part of investing. While headlines may focus on fear during these moments, Experienced investors often use market pullbacks as opportunities to reassess, rebalance, and strengthen their portfolios. There is an important difference between confidence and speculation. Confidence comes from understanding a company before committing their capital. Imagine looking back a decade from today. Which technologies will become essential? Which companies will still be leading, and which businesses will quietly disappear? Long-term investing often begins by asking questions that few people are willing to consider today. Many people believe building wealth requires perfect timing. In reality, some of the most successful investors focus on consistency instead. By investing small amounts regularly, they remove emotion from the process and allow time and compound growth to work in their favor. Investors spend countless hours trying to predict tomorrow's market. But history tells a different story. Staying invested through both good times and bad has often produced stronger long-term results than trying to guess every market move. Market declines often create fear, but experienced investors see something different. Lower prices allow them to buy more shares with the same amount of money, gradually reducing their average cost and positioning themselves for future recoveries. The biggest challenge in investing isn't finding great companies, it is managing emotions. Fear encourages investors to sell too early, while excitement tempts them to buy too late. Long-term success often depends more on discipline than intelligence. Compounding is one of the most powerful forces in finance. Small investments made consistently can grow into substantial wealth over time. The earlier an investor begins and the longer they remain invested, the greater compounding can work in their favor. Every trading day brings new headlines, breaking news, and market predictions. Most of them matter far less than people think. Successful investors focus on long-term business performance instead of reacting to every short-term market movement. Sharp market swings often feel uncomfortable, but volatility has always been part of investing. Every major bull market has experienced corrections along the way. Understanding this reality helps investors stay focused instead of making emotional decisions. Conviction comes from research, not hope. Investors who understand why they own a company are more likely to stay confident during uncertain markets. That confidence can make the difference between panic selling and long-term success. Technology continues evolving whether markets are rising or falling. Engineers keep building, researchers keep discovering, and businesses keep innovating. While stock prices fluctuate daily, innovation moves steadily forward, creating opportunities for patient investors. The best investors don't think like traders, they think like business owners. Instead of asking what a stock will do tomorrow, they ask whether the company is becoming stronger, more profitable, and better positioned for the future. Every major investment opportunity has faced skepticism. New technologies are often questioned before they are accepted. Those willing to look beyond temporary fear sometimes discover opportunities that others overlook. Artificial intelligence is still in its early chapters. New breakthroughs, new businesses, and entirely new industries may emerge over the coming years. Investors aren't simply watching history unfold, they're witnessing the beginning of the next technological era. Asterisks. The biggest opportunities often appear long before they become obvious to everyone else. As artificial intelligence continues evolving, one thing becomes increasingly clear. The companies that keep innovating, adapting, and executing may shape the global economy for decades. Held advantages that ordinary investors simply didn't have. Today, information is more accessible than ever. With discipline, patience, and continuous learning, individual investors now have more opportunities to participate in world-changing innovations than at any time in history. Many people believe they need thousands of dollars to begin investing. But history proves otherwise. Consistently investing small amounts over many years has helped countless investors build substantial portfolios through the simple power of compounding. Successful investing is rarely based on luck. It is built on a repeatable system. Setting a schedule, investing consistently, avoiding emotional decisions, and staying focused on long-term goals often creates better results than constantly chasing the next hot opportunity. Markets will always experience uncertainty. Headlines may predict crashes one day and record highs the next. The investors who remain calm during periods of volatility often place themselves in a stronger position when markets eventually recover. A stock price represents only today's opinion. A company's true value depends on what it can achieve over many years. Long-term investors learn to separate temporary price movements from multiple businesses and sectors helps reduce unnecessary risk while allowing long-term opportunities to unfold. Financial markets constantly evolve. New industries emerge, technologies improve, and economic conditions change. The investors who continue learning, adapting, and refining their strategies are often the ones who remain successful over the long term. Every major technological revolution has rewarded those willing to think years ahead instead of weeks ahead. While short-term price swings attract attention, true wealth has often been created by patiently holding exceptional businesses through multiple market cycles. Fear and greed have influenced financial markets for centuries. Investors who develop a disciplined plan before emotions take over are far more likely to stay focused when uncertainty inevitably returns. Artificial intelligence is no longer just another technology sector. It is becoming part of healthcare, finance, manufacturing, transportation, education, cybersecurity, and countless other industries. As adoption expands, AI is evolving into an entire economic ecosystem. The next 10 years may bring advances that are difficult to imagine today. Smarter automation, personalized healthcare, autonomous transportation, intelligent manufacturing, and entirely new industries could redefine how people live and work around the world. With every great technological revolution comes responsibility. Companies must balance innovation with ethics, privacy, security, and transparency. Long-term success will belong not only to those who innovate quickly, but to those who earn the trust of customers, businesses, and society. Asterisk history often looks obvious in hindsight. But while living through it, the future is never certain. Artificial intelligence may become one of the defining economic transformations of this century. The question is no longer whether change is coming, it has already begun. The only question left is who will be prepared to benefit from it. Artificial intelligence is no longer a prediction about the future. It has become part of our present. Every day, millions of people use AI without even realizing it. Quietly, it is becoming one of the most important technologies of our generation. History has taught us quickly may unlock entirely new opportunities, while those that hesitate risk being left behind. Behind every exciting headline lies one simple reality: financial performance. Investors continue watching revenue growth, profit margins, free cash flow, and customer adoption, because those numbers ultimately determine whether today's promises become tomorrow's success stories. Great innovations rarely reach their full potential overnight. The internet, smartphones, cloud After achieving remarkable success, leading companies continue investing billions into research, infrastructure, and talent. They understand that leadership is never permanent. In technology, standing still often means falling behind. The AI race is no longer limited to a handful of companies. Nations, universities, startups, and multinational corporations are all competing to shape the future. Every new breakthrough strengthens the global race for technological leadership. Somewhere in a research laboratory today, engineers are working on technologies that could completely change the AI landscape once again. The next breakthrough may arrive sooner than anyone expects, creating opportunities that don't even exist today. Markets will always create distractions. New trends appear every year, attracting attention and excitement. Successful investors learn to stay focused on their long-term strategy, rather than constantly chasing whatever happens to be popular at the moment. True wealth is rarely created through one perfect investment. It is built through years of disciplined decisions, consistent investing, and allowing compounding to do what it does best: turning small, regular investments into meaningful long-term results. Artificial intelligence is no longer a prediction about the future. It has become part of our present. Every day, millions of people use AI without even realizing it. Quietly, it is becoming one of the most important technologies of our generation. History has taught us that businesses willing to embrace change often outperform those that resist it. Artificial intelligence is creating a similar divide. Companies that adapt quickly may unlock entirely new opportunities, while those that hesitate risk being left behind. Behind every exciting headline lies one simple reality: financial performance. Investors continue watching revenue growth, profit margins, free cash flow, and customer adoption, because those numbers ultimately determine whether today's promises become tomorrow's success stories. Great innovations rarely reach their full potential overnight. The internet, smartphones, cloud computing, and electric vehicles all required years of development before becoming mainstream. Artificial intelligence is following a similar path, rewarding those willing to remain patient. Even after achieving remarkable success, leading companies continue investing billions into research, infrastructure, and talent. They understand that leadership is never permanent. In technology, standing still often means falling behind. The AI race is no longer limited to a handful of companies. Nations, universities, startups, and multinational corporations are all competing to shape the future. Every new breakthrough strengthens the global race for technological leadership. Somewhere in a research laboratory today, engineers are working on technologies that could completely change the AI landscape once again. The next breakthrough may arrive sooner than anyone expects, creating opportunities that don't even exist today. Markets will always create distractions. New trends appear every year to be popular at the moment. True wealth is rarely created through one perfect investment. It is built through years of disciplined decisions, consistent investing, and allowing compounding to do what it does best: turning small, regular investments into meaningful long-term results. When markets become volatile, it helps to step back and look at the bigger picture. Daily price movements often appear dramatic in the moment, but viewed over many years, they become only small chapters in a much larger story of innovation and growth. Every generation experiences moments of uncertainty. Recessions, corrections, geopolitical tensions, and technological disruptions have challenged investors for decades. Yet, history consistently rewards those who remain disciplined while continuing to invest in exceptional businesses. No one can predict exactly which companies will dominate the next decade. But one thing remains clear: artificial intelligence is reshaping industries at a pace rarely seen before. Investors who continue learning and adapting may be better prepared for whatever comes next. Asterisk, as the AI revolution continues unfolding, perhaps the most important question isn't which stock will rise the fastest. It is whether you are building a long-term strategy capable of growing alongside one of the greatest technological transformations in modern history. Because the future doesn't belong to those who wait, it belongs to those who prepare. We've explored the technology, the infrastructure, the competition, and the incredible investment flowing into artificial intelligence. But the most exciting part of this story is that we're still in the early chapters. The AI revolution is only beginning. Some of today's biggest companies may become even stronger over the next decade. Others may be replaced by startups that haven't even been founded yet. Innovation has a way of rewarding those who keep evolving while leaving behind those who become comfortable. The market rewards patience far more often than perfection. Investors who focus on long-term trends instead of daily headlines give themselves the opportunity to benefit from decades of innovation rather than weeks of speculation. Previous generations witnessed the rise of railroads, electricity, automobiles, personal computers, the internet, and smartphones. Each transformation created extraordinary opportunities for those who recognized the trend before it became obvious. Artificial intelligence may become this generation's defining opportunity. Building wealth rarely depends on one life-changing investment. More often, it is the result of thousands of disciplined decisions made consistently over many years. Every contribution, every lesson learned, and every patient decision moves investors one step closer toward their financial goals.